Major crisis, but big reasons to remain big time optimistic about the gold and silver price. We're going to cover it all in this video. We've got a crisis to talk about. We also want to talk about the richest guy, the smartest guy in the room, who's making massive, mammoth purchases of gold. We're also going to talk about silver manipulation, what we can expect here in the coming months, but most importantly, what happened last week that should have every silver investor's hair curling on top of their head. And have you heard this big story about lab-created artificial gold? You know, they make lab-created diamonds and it crashed the diamond market. Is the same thing going to happen to gold? Big news story this week, but I'll tell you what we can expect from that as well. First, thank you for being here. This is a silver and gold focused piece of content for the basement dwellers, for the silver and gold community. It's a big deal you're here. Hey, people in the crypto world have been begging me for more silver and gold related content as well. Everyone's welcome here in the basement. It's a big deal you're here. Please subscribe to the channel, give the video a thumbs up. Super chats, super thanks are always super appreciated. But let's dig right in. What's the big crisis on Friday? Ever notice they don't do this until after the market closes on Friday? They come out, Moody's, and they finally downgrade the United States debt. Let's run out and take a look at the article, because it's a big deal and it's a big crisis, and we know that it's been a crisis for a while. But here, Moody's downgrades United States credit rating, citing growth in government debt. Well, you think, huh? Do you think there's some growth in debt? Moody's had been on a holdout and had been the holdout in keeping U.S. sovereign debt at the highest credit rating possible. So guys, here's the deal. Here's the bottom line. We're not going to bore ourselves by reading through a CNBC article. We know the real deal, right? Moody's was the last holdout. There's three big credit rating agencies in the United States of America: S&P, Fitch, and Moody's. S&P and Fitch had already downgraded the U.S. debt. I think S&P did it like 10 years ago. Anyway, the reality is we're in a debt spiral. Here, we can do a crash course, less than 60 seconds, and make it very, very clear to all of us just exactly what is going on. There's our national debt, $37 trillion. Interest on the debt, $1 trillion. And we have a deficit, okay? Here, get your calculator out. Now, you know what? You can do this in your head. U.S. federal spending, right? The government spends $7 trillion, and the government right here, U.S. federal tax revenue, brings in $5 trillion. That creates this budget deficit, which every year makes the national debt go up. And with interest rates going up, that makes interest expense. Here, I'll show you what it creates very quickly. What color you want? How about a shade of blue for you today? What it creates, the debt makes interest go up, makes the deficit go up, which makes the debt go up, and it just goes in a great big circle, also known as a debt spiral. That's the situation we're in. It is a crisis. Gold and silver stand to benefit. Real assets, anything that's finite. You know what infinite means? You can make it forever. Here, I'll show you a quick example of infinite. They can print infinite of these. As a matter of fact, they're going to have to deal with that debt crisis. Anything that's finite, maybe something that's been valuable for 5,000 years. Here, look at this pretty 5-ounce bar from First Met, right? It's finite. There's only so much of this in the ground. God, Mother Nature, however you want to say it, only put so much silver in the ground on the planet. Gold also. Those will do very well. That happens to have been money for 5,000 years. Yeah, when you hold a piece of this in your hand, you're holding a piece of monetary history. It's been valuable for 5,000 years, older than your grandma and grandpa, okay? All right, what about the smartest guy in the room? What if the smartest person you heard was buying gold and silver? We're going to blast through this one, but it's very important. Ray Dalio. Do you know who Ray Dalio is? Founded Bridgewater Capital, one of the world's biggest hedge funds. He's one of the wealthiest guys. He started this out of his apartment and built it into this massive hedge fund. He's buying gold. Okay, when we talk about gold, is gold what's good for gold is good for silver as well. Let's go check out what Ray is doing And we will go, hold on. We'll go here first. Ray Dalio. Just if you want to look him up, do it yourself. Legendary hedge fund manager and founder of Bridgewater Associates, one of the world's largest and most successful hedge funds. Next. And I forgot to share that. Hold on here. Sorry, guys. There it is right there. Ray Dalio. I just read it to you. We won't read that again. Let's go to the next screen, which will show us big news this week that guy, the smartest guy you know, the smartest guy we know. Okay, I know you're smart. You've got a good head on your shoulders, plenty of intellectual horsepower. But here from Barchar, whoa, Ray Dalio's Bridgewater Associates opened up a $319 million position in gold, according to their new 13F filings. The 13F filings are the quarterly filings that the big hedge funds are required to put out. Now, look at this. I'm not going to play this whole thing for you, but I'd highly recommend you watch this video. It's called The Time the United States Ran Out of Money. And we'll just watch the first 30 seconds and the last 30 seconds. Then I'll tell you a synopsis of what she's all about. We'll do the hokey pokey and we'll turn ourselves around. And that's what it's all about. And let's start.
When I was a young clerk on the floor of the New York Stock Exchange,
19.
The United States ran out of money and defaulted on its debts. That's right, the U.S. ran out of money. How? Well, back then, gold was the money used in transactions between countries. Paper money, like the dollar, was like check.
Okay, guys. So what he talks about in this is what happened in 1971 when President Richard Nixon took the United States temporarily off the gold standard. Okay. And he also talks about in 1933 when Roosevelt, because the government ran out of money. The government, during both of those periods, the dollar was backed by gold. The dollar was also backed by silver at times in the past as well. But nonetheless, the government needed more money, but they didn't have the gold to back it up. So they just conveniently said, hey, you know what? We'll stop backing our money with gold. Hold on. Let me give you a good quick look in the eye. And you know what that led to, right? Money printing, of course. Let's go back to the video and just watch the last few seconds. And remember, this is the guy who just bought a third of $1 billion worth of gold. Here, last few seconds.
In both cases, breaking the link to gold.
When he says in both cases, he means 1971 and 1933. Now I'll shut up. I promise. There we go.
In both cases, breaking the link to gold allowed the U.S. to continue spending more than it earned, simply by printing more paper dollars.
Print money.
Since there was an increase in the number of dollars without an increase in the country's wealth, the value of each dollar fell.
There you go. That's what happens, right? We do the hokey pokey and we turn ourselves around, and that's what it's all about. There's Jerome Powell, needed to make his daily visit. Yeah, look, remember, right? That's what happens. So Ray Dalio buys a third of $1 billion worth of gold. The smartest guy in the room. What is that telling us? All right. And makes it very clear, right? I mean, it's real clear. You know, like when the dollar was backed by gold, they couldn't print it. Both cases, when they print it, the dollar goes down in value and gold and silver skyrocket in value. Not that we need to even talk about it, because, you know, we've been down here banging the table for years about stagflation. And we are now moving into a period very similar to the 1970s, very similar to 1971. A stagnant economy with inflation. Later on, I'm going to show you JP Morgan Chase CEO Jamie Dimon. He's retiring. Get the new guy to poke fun at, but Jamie Dimon is saying that we could very well be in for a recession. We'll look at that later. What else do we got to get into? So the richest guy in the room is buying gold, and that's also good for silver. The gold dips are being bought. One of my favorite analysts by far, right, points this out. And are you seeing this? Because I'm seeing it, but we're not seeing anything on the screen right now. Hold on here. Let's hope this pulls up. Come on, computer. What is going on? Uh-oh. Hold on. Welcome to live streaming. Okay, basically, I'll tell you, it's our friend Rashad. Oh, did it come up? Bear with me. What is going on? Page unresponsive. Wait. Well, we can sing to each other while we're waiting here. We're going to try one more time. Why is that?
Video.
What's that?
Get out of the video.
Get out of the video. I am. I don't know what's going on. Boy, we got the whole show's falling apart. Here we no. Huh. All right. Anyway, guys, Rashad basically points out the fact all the dips in gold, all the dips in silver are being bought. Okay. Silver, we'll talk quickly about the price. We're hanging out around $32 an ounce. That's okay. When we look at a chart over the last year, 6 months, we've been in kind of this $30 to $35 range. Right now, we're right in the middle. What we're doing, right, is called consolidation. That means any of the people that aren't on the boat with us with silver are selling. Like, oh, I got to get out. It's going to go back to 20. It's going to go back to 18. Now, you know what I predict that by April 1st of next year, we'll be at $60 silver. But the chickens right now, the chickens are selling. They're getting out. New people are coming in, buying the silver. We're building a base from which we will propel higher throughout the end of the year. Now, remember, that's just my opinion. I'm not a financial advisor. Don't make any financial decisions based on what I say here today. But it's what I believe, and I do wholeheartedly believe that by April 1st of next year, we are going to see a much higher silver price. But what about silver manipulation? Silver got clobbered on what was that, Wednesday? Look at this. Hold on here. I don't know why that's not pulling up. That's bugging me. Anyway. Okay, you should be. I don't know what's going on. Stop sharing. Bear with me here a second, guys. We're having some technical difficulties. Hold on here. We are having some technical issues. I'm going to close that out and see. Okay. You tab, sharing this tab. Okay, I think you're on the right screen. No. Hold on. Everybody stick with me. We're having some technical problems. Either that or I'm having a brain problem. That happens from time to time. But I'm going to try to hold on here. Stop screen. Okay, I'm going to try to do this again and see if we can get this to work. Share. Okay, that's not working. What is going on? Stop sharing. Okay, let's see if this works. And the browser can't access your screen. Oh boy, this is crazy. Sorry, guys. So Wednesday, the price of silver got clobbered, and it was basically this incredible. Hold on here. Share. All right. Let's see if this is working. Okay, now it's working. Sorry about that. We're having some technical problems. Let's go over here, and share this tab instead. This came from the guy Manico. He is a fellow YouTube content creator, great guy who I followed very closely. What we're seeing here is what happened on Wednesday when he calls it the Crimex. What does he mean by that? The Comex, those wonderful people, right? This is what happened on Wednesday when the Comex opened. Look at that. Boom. One massive, incredible red candle. Okay. Everybody out there screaming like, what happened? This is insane. This is absolutely crazy. Let's look at this data that we got from the dude on Thursday, which highlighted what happened on Wednesday, which was the silver market traded 255 million paper ounces on Wednesday. Okay, so here we go. Right there, you can see on the thing, that's the Wednesday data. Guys, and again, in one day, we're talking about trading probably the equivalent of a third of the entire silver mining output for the year. Okay, in one day. Also, it's been pointed out that during that one day on Wednesday, there was like a 1 hour period where the equivalent in 1 hour, the equivalent of almost 60 million ounces of silver were traded, which some people are saying was like a record or something like that. That's like 7%, 8%, darn near 10% of the entire world's mining output of silver traded in paper, right? Paper, make-believe, fantasy silver. So the silver market, the silver price, it's hard to argue that it's not being manipulated. One more piece of data that we'll look at here in that regard is from our good friend, the Shanghai Ghost, right? Let's pull him up and give him proper credit. By Jajun, he gives us the data from the Shanghai Gold Exchange. And when we look at this, right, let's look at the silver price right now. This is the physical market. You're going to hear me say it over and over. The Shanghai Gold Exchange is a physical market, different than the COMEX, different than the LBMA. And when we pull out our crayons and we look here, that's AG on the SGE, the Shanghai Gold Exchange. Their price for silver is almost $35 per ounce. It is absolutely ridiculous. So that's the Chinese, and the Indians are the ones buying all the silver. It's absolutely insane. Now, one final point on silver that is getting very interesting. This comes from the Silver Academy. Paper money began as receipts for gold and silver held in vaults. We know all that. Silver news first, okay? The Shanghai Gold Exchange that we just looked at, silver vaults are down. The silver vaults hit the lowest level in 11 months, down 47 tons this week. That's significant, right? To 887 tons or 28.5 million ounces. And then they compare the amount of silver in the Shanghai Gold Exchange silver vault to the annual silver mining output. And it's absolutely crazy. Right now, it's 12.5 days of mining. So, guys, we're going to keep an eye on this silver market. It's absolutely crazy what's going on there. But right now, I want to say thank you to the sponsor of my gold and silver content, First Mint. Okay. We talk a lot about Keith Neumeyer. This is part of Keith Neumeyer's First Majestic Silver. First Mint is their mint in Las Vegas where they're producing world-class silver bullion products. I showed you this earlier. Okay. This is a 5-ounce bar that I got from First Mint. Isn't that just absolutely stunning? This has got to be the coolest thing. I'll tell you who also likes this is upstairs Susie, my lovely assistant. Let's check in with her and get her opinion on that bar. Hey, Susie, what did you think about that 5-ounce bar that we got from First Mint?
I love it. It's the cutest thing I've ever seen.
Thank you, sweetheart.
More of them, please?
Yeah, and she's not being paid to say that. No, we were out sitting out. I was showing it to my mom and dad last Sunday, and I'm like, I was showing it, and then Susie she said, I really like this. This is cute, right? So here's a 5-ounce bar. They have rounds, really beautiful, unique, like I said, world-class silver products. Here, I'll show you the website real quickly, and just so you can get an idea of some of their other products. Okay, here we go. Okay, there's the Hail to the Chief 1-ounce Buffalo round, the Year of the Snake. And I've got some of these. I'm going to show these to you in the coming days. Beautiful piece in the Year of the Dragon as well. They have free shipping on orders over $199. There's the bars, different sizes, right? 10-ounce bar and a kilo bar. I've never had a kilo bar. Do you own a kilo bar? I need to get a kilo bar. But something very unique about First Mint sets them apart. Okay. Like I said earlier, they're part of First Majestic Silver. First Majestic mines the silver in Mexico, ships it to the mint in Las Vegas, and then it goes directly to you. Is there something missing in that process? Remember we talked about earlier, a lot of us aren't very fond of the COMEX and the LBMA, how they manipulate the paper markets. With First Mint, you're going from the mine to the mint to you. COMEX and LBMA free. They're a top-notch company, right? They've got great selection, world-class products, right? Great customer service and great prices. Check them out. And, before I forget, they have a discount code for you. VIPRB. Very important person, Ron's Basement. VIPRB. Check them out. Thank you, First Mint, for sponsoring Ron's Basement. We do appreciate it. Okay, guys. I forgot. I'm forgetting to talk about a lot of these things. I heard somebody talking about this, several people the other day. We can't forget that right now, when it comes to silver, we love gold. We love gold. We're going to talk about artificial gold, lab created gold. Is that going to crash the gold market? Should we all sell gold? Heck, they're probably going to do silver next. We're going to get to that. But right now, guys, the gold to silver ratio is at 100 to 1. Yes, you would have to take 20 of these. 20 5-ounce bars and trade them in silver bars to get 1 ounce of gold. I personally don't think that's a good deal, but I'm not giving financial advice. I'd buy the silver if it were me. But there are people, it's not out of the question that we could see a 15 to 1 gold to silver ratio. It's gotten that way during times of crisis in the past. Look, we looked at the debt clock earlier. Okay, we know we're going to hear what Jamie Dimon says about the potential for a recession. And we know that it's inevitable, because it's just the way things work, that crisis happens. We do get crisis. So to think that we can't get to a 15 to 1 gold to silver ratio is not out of the question. You can throw eggs at me. I don't care, right? I can say what I like. It's a free country. It's my basement. I believe in silver. I believe in gold too. Hey, I'd like to see, like a $15,000 gold price with a 15 to 1 gold to silver ratio. And if my mathematics are correct, that would mean $1,000 silver. And I said earlier in the week, I don't rule out that in the next decade that we will not see $1,000 silver. And I've said publicly that by April 1st, April Fool's Day, 2026, that I absolutely believe that we can see a silver price of $60 per ounce or more. What do you think? I think that's my prediction. If I'm wrong, you know what? You guys come up with a punishment for me. I'm already getting punished enough by upstairs Susie. And by the way, just so you know, this is Susie, upstairs Susie, as we like to call her. She's the real boss. She's my lovely assistant. This is not possible without her, but it's also not possible without you, the basement dwellers, right? And all the people that are out there. And I'm telling you, people in the crypto world are interested in gold and silver. We know the basement dwellers love the gold and silver. So I just want to say thank you for being here. Thanks for supporting us. It's a big deal. I come down here and just speak my truth, what I believe about silver and gold. I'm not saying that I have a crystal ball, right? Listen to me. There's a lot of other great content creators out there in the silver and gold sector. Listen to them and then make up your mind for yourself. For me, I think it feels good to own some physical silver, right? I don't keep it here at the house, but I love silver and I love gold mining stocks, as most of you know. Anyway, I got off track. If we get this crisis, what's Jamie Dimon telling us? Let's just take a quick look at what Mr. Jamie Dimon is telling us about what to expect in the economy. Okay, and I'm going to give you the little kicker after this, the thing that maybe we don't think of, but is very true about what Jamie's saying. He says the recession is still on the table for the United States. Specifically, Jamie said that he would defer to his bank's economist, who put recession odds at close to a toss-up, so 50-50. He was saying this Thursday, that a recession is still a serious possibility for the U.S., even after the recent rollback of tariffs with China. So even after, he says, if there is a recession, I don't know how big it will be or how long it will last. Hopefully we'll avoid it, but I wouldn't take it off the table at this point, the JP Morgan Chase CEO said in an interview with Bloomberg Television. Okay, so here's the thing we need to remember. These guys on Wall Street, this guy, Mr. Toilet Paper Dollar Printer, and we love him. We love you, Jerome. I've always been fond of Jerome. Don't like what he does, but I don't know, something about him. I got a warm spot for him. Those guys are paid to put out the most optimistic projections, okay? that they can put out. Remember, not Jerome Powell, but the other guy, not Ben Bernanke. Yeah, Ben Bernanke, before the great financial crisis. Think about this. Right before the great financial crisis, he was in Congress telling them everything's great. The banking sector's healthy. Everything's wonderful. Don't worry about anything. We're doing great. And then boom, like 3 months later, the world fell apart. Right? The whole world financial system was in tatters. Okay. So when Jamie Dimon, who's retiring anyway, is saying, well, there's about a 50-50 chance that we could have a recession, the R word, you better put that through the filter, the old filter in your head, and realize he is being paid big money to be an optimist, right? Jerome Powell is telling us that there's a lot of uncertainty. If he's saying there's uncertainty, right, that means there's a lot of uncertainty out there. Okay, are they making lab-created artificial gold? Alchemy, big story this week, created a lot of furor. People are like comparing, right, this idea that supposedly this lab created artificial gold in a lab environment, that it could result in a crash in the gold price. Not dissimilar to what we saw with diamonds, because they figured out a way to make diamonds in laboratories, and then everybody was showing all these charts of the diamond prices crashing in the next few years, and they were saying that, could this happen for gold? Right? Well, let's dig in. Let's do a little mining and see if we should be worried or not worried. We're going to clear this up for you. Oh boy, now this isn't working. What the heck is going on here? Hold on. Let's go back here. You're going to watch me as I struggle to pull this up, but I'm going to find it. Lab created gold. Here we go. See if this works. All right. Hold on here. Hold on 1 second. And come on. Here, wait a minute. I got a better way to do it. Hold on. There we go. And I think you're seeing it. No, you're not. Now you are. Here we go, guys. Sorry about that. I don't know. The computer's acting weird today. It says, this is from ABC News. All right. Scientists at the CERN's lab, CRN, I don't know what that is, but I've heard of it. A large hadron collider has successfully transformed lead into gold atoms, achieving an ancient alchemist dream through modern physics. Okay, so should we be concerned about this? We asked our friend Grok, right, which is the new Twitter X AI, okay? He says, let's cut through the noise on this one. The claim about the CERN turning lead into gold sounds like a sci-fi headline, but there's some truth to it, though not in the way it's being spun, okay? Scientists at CERN's Large Hadron Collider have indeed managed to transform lead into gold, but it's not like they're spinning straw into gold for the market. This is a high-energy physics experiment where they smashed lead ions at near light speeds, and in those collisions, they can briefly detect gold atoms forming. We're talking for a fraction of a second, hardly enough to flood the market or tank gold prices. The idea that this makes gold, quote, no longer scarce is a stretch. The process is insanely expensive, energy intensive, and produces tiny amounts of gold, nowhere near what you need to disrupt the global gold supply. This is more of a cool physics trick than a gold rush. Woof. Are you feeling a relief? Are you feeling a sense of relief? Because there were people, I kind of freaked out. Like big high-level people were putting out tweets on X saying, the gold market's doomed. They created artificial gold. Well, no, the reality is it's very expensive. It's very temporary. And right now, we don't have anything to worry about. It's kind of like those people that say, oh, there's asteroids out there that are full of gold, and all we're going to have to do is send up a spaceship and get all the gold out of the asteroid. Well, I don't see that happening anytime in the very near future anyway. So, guys, we got big crisis when it comes to silver, when it comes to gold. Just in case you were wondering, and I'm wondering how you're feeling about it, but I know that we are in good shape. Okay. I do think, Susie and I were talking the other day because we talk a lot about gold and silver. And I was like, I think the summer we could be in a bit of the summer doldrums for both the gold and silver price. I'll tell you, I'm cool. I'm cool as a cucumber. I'm wondering how you're feeling about this. But if the gold price just stays above 3,000 throughout the summer months and heads into August and September at 3,000, 3,100, I think we could be in for a big push higher through the end of the year. I'd be surprised and quite frankly a little depressed if the gold price dips below 3,000, 2,900 as we make it through the summer. Silver, I'm just expecting to stay above $30 per ounce through the summer, but I'm very optimistic that we maintain this 32 range for now, continue to build a really strong base in the silver market that's going to allow us as we move into the end of the year, right? Because all these problems, these crises that we have, the Moody's downgrade, just a symptom of the underlying sickness that we have in the U.S. fiscal situation right now, right? It's going to be, we're going to be silver on many levels, right? Many different factors. I could sit down here, we could talk about this for the next number of hours, but guys, think about this. We're in our 5th year of a silver deficit. Okay. We are consuming a lot more silver every year than we are producing. Where does that silver come from? That extra demand that the world requires above what the mining companies and recycling companies can provide. It comes out of the above ground silver supplies, and that is dwindling. So we'll hang in there. Let's see how this all plays out. Okay. I appreciate you guys being here. Thank you. Thanks for being part of the. Say hi to a few people. Okay. All right. Well, the boss here. Everybody do me a favor in the comments. Say hi to Susie. Susie, you say hi, and they're all going to say hi to you.
Hi, everybody. Thanks for watching. I hope you have a wonderful rest of the evening or morning, wherever you are.
All right. Thank you, Susie. Okay.
Like, share, and subscribe.
Hello, Echo Leaf. Hello, Account 3. Hello, Davy Jones. Oh, look at everybody saying hi. Come on, say hi to Susie, the bunny house. Yeah, it's Susie's house, indeed. Hey, bub. All right, silver will go up. Cactus Slack says hello to Susie. You guys are great. Okay. Hello, bunny house. All right, who else? Who else wants to Echo Leaf? And Sexy Seahawk 69, Limerick Silver. Hello, says hi to Susie. Susie says high five. Yeah, we love our upstairs, Susie. We love our silver and gold. All right, guys, have a great day. Thanks for joining me. Okay, and I will see you soon. Hey, Jay Wilkes says hi. Bye-bye.